That's it. Goodbye. I'm not going to waste my time arguing with a man who's lining up to be a hot lunch.
Hey everybody, Walrus here from Walrus Street, bringing you another episode of SPAC Week. We're back for day 2, previewing and profiling the 5 SPACs that I am holding. All 5 of these SPACs are post-DA, so they're relatively safe bets. Aren't you tired of losing money on solid biotech and pharma companies in your portfolio? Check out a SPAC. It's really tough for them to drop below NAV, except for this one. Today's SPAC is going to be TPG Pace merging with Nerdy, which is an online tutoring solutions provider. This is a SPAC that somehow, some way, has dropped below net asset value, which is $10 for this one. Let's take a look. Here's the 8K filing on the definitive agreement for the merger between TPG Pace, ticker PACE, and Nerdy. You can see here that the warrants are being issued under Pace WS and the commons are Pace. This form was filed back on January 28th, 2021. This SPAC has generated the least hype of any SPAC that I've seen, which makes me feel like this one is probably going to be the one that blows up because everybody's ignoring it. I've found that quite often people are stupid and they ignore things that are going to be making a lot of money. So this one might be a little bit of a contrarian SPAC, but it's one that I am very excited about. Currently, the value is at $9.95. Again, net asset value is $10 a share, so this can't actually be much cheaper. This is the Nerdy website, transforming the way people learn. They focus on connecting learners and experts in 3,000 plus subjects. It is the leading direct-to-consumer curated gig economy platform for live online learning, led by our flagship business, Varsity Tutors. We leverage technology and AI to deliver personalized live learning at scale. I hate the gig economy. I think it's stupid that people can't make enough money with their primary job to live. Hello, YouTube. But I am a realist, and the gig economy is here to stay. So let's invest in it. This is Nerdy's investor presentation with TPG Pace. Ticker is going to be Nerdy, NRDY. Pace has raised $150 million pipe of common equity at $10 a share, and this represents an attractive entry multiple of 7.1 times projected 2022 revenue of $198 million. The TPG Pace introduction, they've been working with all of these companies here. Here's TPG's investment thesis for Nerdy. Large TAM ripe for disruption. You guys know I always like to highlight the TAM. 1.3 trillion offline direct-to-consumer education market is moving online quickly. COVID forced a step function shift to online adoption that we expect to persist. Nerdy's business is inflecting now as revenue growth and engagement are accelerating. Multiple growth vectors, including adding more subjects to core one-on-one tutoring, expanding further into group classes, self-guided study, international expansion, potential M&A opportunities. Here's their numbers, and this is why I'm excited about this SPAC, even though it seems like nobody else is. Their annualized revenue was $132 million in 2020. Online revenue growth, 87%. Gross margin, 68%. 68% for gross margin. This company is trading like an SaaS, software as a solution company, even though it's a service provider. A 68% margin for a service provider is unheard of. Historical and projected online revenue. So this goes back to 2018, 2019, 2020, 42, 64, 97. 2023, they're projecting a $267 million online revenue. This is a 45% annual growth rate. And people are more likely to use online learning compared to a year ago. So COVID has actually accelerated this company's adoption. They can help with professional certifications, training, test prep, academic tutoring, other education. The US direct-to-consumer learning total addressable market in 2024 is expected to be $62 billion. Technology-driven process for identifying and curating top experts, and their matching process helps learners identify the right expert for their particular needs. So learners provide information, Nerdy collects information about their experts, and then Nerdy's AI matches what the learners want with the experts available to provide them with the best tutoring solution. Their numbers in 2020, 4.7 million plus hours, 3,000 subjects tutored. This is a section that goes through their AI, the interaction layer, adaptive learning, matching, curation layer, all from the data that they collect on their experts and on their customers. What's important about that, it's not really how the AI functions, it's that the customer experience is incredible with Nerdy. Seriously, go look up any of the online reviews reviews on Nerdy, and you're going to see overwhelmingly positive comments and reviews on the service. This indicates that whatever they're doing to match the experts with the customers is working. This shows their vectors for sustainable growth. I think the most notable are the group classes in the future for their format expansion and then international expansion eventually. Competitive landscape. We have to talk about the competition. So we've got Nerdy, Chegg, Sylvan, Udemy, Coursera, those types of things. Of course, they're going to give themselves green check marks and everything. But what's most important, I think, is their audience. They're appealing to all audiences. K-12, undergraduate, postgraduate, professional, continuing education, everything. Chegg is a little more limited. Everybody else actually is a little more limited. Right now, Nerdy is trading at a similar multiple to Chegg as far as earnings go. So this is not going to be an explosive growth SPAC. This is going to be one of those slow growers. It's going to be a slow burn. It is going to go up over time. They've got adoption going in all the right places, high customer satisfaction, high customer retention. This is one that we're going to have to kind of wait on, but it is going to be a slow, consistent grower in my portfolio. This is their gross margin, and I was talking about this earlier. They just hit 66% margin, although I don't know why this is a different level than this 66 if they're both 66. That's a little misleading. You could see it, they're projected to become even more efficient over time for their gross margin. So this is higher profits for the company. They also just released their earnings report, and it was actually a little bit higher. Their gross margin increased to 68.4% in Q4 from 65 the year-on-year quarter, and their revenue was up substantially. Let's take a look at the graphic here. Give our kudos to the creator. This is from when the merger was announced, so the price is not accurate, but you can see they are experiencing revenue growth over time. The merger is expected in Q2 of 2021. At $10 a share, the enterprise value is going to be $1.4 billion. If you take a look at the numbers, you could see that people bought into the SPAC a little bit higher, and I think they were disappointed with the merger with Nerdy. So right now, almost everybody's invested at a higher total, and unless they're going to be selling at a loss, this is a very attractive entry point for pace for Nerdy. This is going to be a consistent grower, like I said. I'm very, very bullish on this one going into the future, and I'm happy to have this one in my portfolio. To bring out our shark comparison for SPAC week, I'd have to say this one's most like a nurse shark. Slow moving, but big nonetheless. And if you stick your foot in front of its face, it can still suck you in. Beautiful creature. Beautiful creature. I'm very excited about this one. That wraps up our second episode of SPAC Week. If you guys are new to investing, please check out my Webull referral link below the video. If you create an account with Webull, invest $100, you get a free stock, I get a free stock, everybody wins. Because I'm partnered with Webull, the stock that I'll be getting is worth at least $30. Also, if you enjoyed the video, please like the video, subscribe to the channel, and as always, if you want to be alerted to all my content as soon as it goes live, hit that notification bell. All right, everybody, see you next time.